Your trading needs to be way more simple than what it is. If you want to understand humans, just give them a menu and see how long they take to make a decision on what they want to order. Then you want that trader to trade 6 figures, multiple 6 figures, 7 figures, and wonder why they have issues sticking to their plan. Wonder why they're impulsive and taking trades that don't meet the criteria out of emotion. This is why you have to have a holistic approach. The technical skill is one element of it. The mental skill is a whole different ballgame. It does not come to you just by being a better trader. There are things that you have to do. When you fuse them together, you will be an unstoppable trader. In this video, I'm going to build on the previous video. Now, the previous video was centered around good losses and bad losses. The feedback was really great. I'm glad it was helpful for you, that you started to realize there is a difference between trades that are just sequential, that are losses. They're absolutely fine. All traders take losses. Versus the trades that in hindsight you quickly figure out that you shouldn't be taking. If it wasn't emotional, this is a good clue for you to be able to realize, depending on what, it doesn't matter what strategy you trade, how your beliefs of the market, whatever it is. The best way for you to figure out whether it's a technical glitch or a psychological glitch is that if you are a trader that can figure out in a fraction of a second or 5 seconds later after you take the loss, there was a technical issue. It's not a technical issue. It's an emotional pull. Whether that be fear of missing out, whether that be your timeline edge, whether that be you think that the more trades that you take, the closer you get into profitability, or that trade could be the one that gets you past your funded assessment. Whatever it is, and we can go even deeper on that, if you're figuring out your mistakes from a technical standpoint almost instantly straight away, it's not a technical issue. Because you already understand what you need to do, but you just can't do it. You cannot follow the plan. You have no discipline. And you think the more understanding of technicals is going to fix that. But you're going to go down that rabbit hole for another year and you'll be in the same position. So do me a favor, pay attention with no ego. I promise this is going to transform your trading. So before I demonstrate on Euro Aussie and Kiwi CAD, I'm live in this position. Let's actually have a quick look at that. So I'm live in Kiwi CAD and you'll understand why when I explain Euro Aussie for you. But you need to understand fully how humans behave and how they work. Now, if you're under the assumption that you don't need to do any inner work and you don't need to do any psychological training, you're a little bit naive coming into the financial markets. All you have to do is look at someone when they're ordering food, or look at an individual when they've got to make a decision. Look at yourself and remember the amount of times when someone said to you, right, what color t-shirt do you think I should wear? Even forget about food. You know how long people take to order, right? Because they can't make decisive decisions. Think about when you're choosing something to wear. How many of you are looking at your wardrobe and you're just going through, oh, I'm not sure what I should wear. You can't make decisions. And these are low-level things where there's not even a consequence. And do you really believe that you're going to get to a level where your risk sizing is 10k a position, 15k a position, 20k a position, and you're just going to be smooth? There's going to be no emotional things that come into play. So a little bit naive to think that you're going to get there without that. You should be focusing on wanting all of it. However, there are some things that from a technical point of view, yes, it does fix elements of your psychology. If you're a terrible trader, you're probably going to have more psychological issues. So focusing on becoming more skilled is important. So let me explain something to you. From my perspective, and I've trained a lot of people now in different strategies as well that come into things like Rewired, what I notice is this one thing, and I thought I'd share it here. It's basically taking trades in bullshit areas. And the easiest way for me to explain it is like this. Let's say we've got an impulse, right? Move down, come back up, and we've left a footprint here. So this is where a lot of volume stepped in, and then we've moved away from here. Now this could be, again, on the daily, the 4 hour, 1 hour, doesn't matter, right? We get a lot of momentum, but ideally some kind of higher time frame, no lower than the 1 hour. So price moves away. Now you understand already, this is the area where most of the volume was triggered, right, versus generated, and that we're going to be looking for price to tap into that area to look for trades. That's going to be the safest place for us to get involved in the market. What I tend to see is people do this. So price might come up and it leaves a bit of a gap, it comes back down, creates more of like a local high versus the major high. And then what happens is we come down, price might create a bit of a base, we come back up, and maybe we miss that as well. We come down, we come up, and we just get a consolidation, just sometimes choppy price action, etc. What happens is people start taking trades in these areas, right? They think, right, then this is gapped towards here, by the way. So you'll see a gap between this high towards this and this high where it gets really close towards that area and still leaves a gap. And what they do is they're trading something zoomed in like this and then taking a loss because something just doesn't commit. They have the right idea as to what they're looking to trade, but they're so zoomed in with almost a lack of appreciation for the higher time frame, they end up taking loss after loss after loss. So it's not that they're not a good trader. It's not that they can't take good trades. You got to remember, inconsistent traders take high quality trades. They just take too many shit ones. That's it. They cannot control themselves and they just bang, 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 hammering trades when they know, and they can zoom out and go, right, it's probably a good idea for me to be trading in two areas. Here's a sharp point, here's a sharp point. So let me just trade here and here, and anything in between is probably a bit of noise. Even if I go to the isolated entry on the lower time frame, even if it sets up, it's going to carry more risks. I'm probably more likely to go through unnecessary drawdown. Again, good losses and bad losses. If you show me trades in these areas and you take a loss, it's just sequential, because I know you've assessed the situation to the highest degree, where you've positioned your stops well, you understand where the volume's going to kick in. So what more do you want? And the simple way for me to explain that is if we just take a look at Euro Aussie. So Euro Aussie, again, establishing value. There's the high. So we sell off, we break the low, we come back up, we leave that point that I said. We leave a gap, right? Technically, you could consider this as a trade that temporarily works out, but it carries a lot more risk. Then we move back up. You can see again the gap between the high. We eventually come here, we take out the high. This is the value area. That's the key area that you want to be trading from. Right, sells off, you make a bit of profit, and it's in this region. So now what you have at this point is you've got your new high. This is going to be what's important. And everything that I just explained to you in the drawing is what's going to help you out. So you'll notice how you have a point of volume there, we sell off, we come back up. And if I draw that on just roughly, look at the gaps, look at the gaps. Now, I'm on the 1 hour. So at this point, if I start going to the 15 minute and I zoom right in, you overvalue things that are not valuable. So what ends up happening is that you start taking something like this. Let me just clean this up for you. And I'm hoping this pinpoints so you can, and this is not a dig towards a strategy per se, because this could come into, this might cross over in like 5 different strategies. Like, I don't care. What I'm saying is that if you're not understanding where the volume is, it doesn't matter what your beliefs are about the market. There's going to carry different risks and you're not positioning yourself well. It would be the equivalent of people taking trades here, because right, there's some volume, right, we've come back up, we've tagged it once, we've come back up, we've tagged it again. You know that there's an area above, whatever you want to call it, a zone, POI, what, I don't care, right, resistance. You're taking trades here and going, right, loss, yep, just part of the game, just took a loss, fine, and you move on. And then what we do is that we will look at that, and I've seen so many journals like this where I'll just go to the 1 hour for me for a second, right, and we'll just box that off. I'll say, right, go to the 1 hour for me. And then, right, we'll click to the 1 hour, say, yep, okay, so what are you thinking? What garbage positioning. And then what you'll see is a trend of they'll take trades in valuable areas. Now, I know we had a gap here, but let's say this was full price and you took a trade here. We've already established this is where most of the volume is, so this is going to be really valuable. Look at the same behavior that I'm talking about. There's your high. Look at the gap, right? We take out that high, but we leave a gap towards where most of the value is. What do? We take out this high, but we leave a gap again. We come back in. So no coincidence that we finally took out the high. So this is where the liquidity, most of the volume is going to reside, where you want to get in on that trade, which was our original idea for the trade. They get in these trades as well. The issue is it's the in-between. So what I want you to think about is how many in-between BS trades in here, and you kind of make them up, right? And of course, different strategies, they're going to be different reasons as to why maybe you're getting in, playing a range. I don't know, and I don't need to know. The only thing that I can do is look at any one of your trades. I don't care how you trade. I almost guarantee I could look at 20 of your trades, go to the 1 hour alone, and probably chalk off 9 out of 20 trades I'd be able to chalk off as just garbage, poor positioning. So they might meet the criteria on the lower time frame, but they carry so much risk, you're just having unnecessary losses. So I'm kind of looking at it thinking, All you need to do is reduce the frequency of your positions and just have a bit more understanding as to where the volume is likely to kick in. That alone, I have seen, has changed so many traders' performance. And of course, we've had that more so in Rewired, because I've been able to see different systems where people send me a direct message and say, right, look, this is the way that I'm trading. What do you think of this? I'm like, right, truthfully, I don't know your system. I don't know how you trade. But what I can do is point out that where you're trading, the area that you're trading, does carry a lot of risk, and you're just adding unnecessary losses. But then they are also at the same time taking trades like, I would say this, right? So this was this one up here was a missed trade for me. Got 3.3 on this one. So they will also still take, and for different reasons. So for the reason that we would take it would be here after this 1 hour. So that would be the reason we would take it. Our stop would be positioned anywhere between 17 to 18, and then you would have walked away with roughly, by the time you're taking out, anywhere between 3 to 3.5%, right, depending on your stop, etc. So it would have been just a quick 3-ish to 1. They still take these style of trades. So I know for a fact they understand that this is a valuable area to be looking to trade from, whether you want it as a zone or whatever, it doesn't matter. You understand, after we broke, we left this area, and that was where all of the volume stepped in. So price tapping back into that is a good area for us to trade. So I know that they already understand this. What will happen is, again, go to the 15-minute. I'm just trying to point out a mistake, is that they know this is the area right here, right? You can all see it. It's so simple. You just go to the 1 hour and you can see it. But they can't help themselves but go, but what about this? And they start trading. They'll show me another zone in here. I'll say, right, so why are you trading in there? It carries so much more risk. It's more likely to tap this high and then carry on than go from here. But what they'll do is they'll hammer it, go, right, -1, -1. They'll try and catch it again. And then eventually they'll catch this and think, it was just part of the game. To a degree, you might be offsetting those losses, but it will catch up with you. What I'm saying is that you're already doing so much of the right things. Why are you adding in the garbage along here that you don't need to? But it's just about having more of an appreciation of the higher time frame, so that when you do go to the lower time frames, by all means, go to the lowest time frame you want. I don't care. What I'm saying is I've seen it too many times. I've seen too many journals to show the inconsistencies of these garbage positions. So take that however you want. I believe this is really helpful. If I was one of you and you showed me this and I'm consistently in drawdown, I'm not going to take offense to that. I'm going to think, well, maybe that he might be onto something. Let me go and look at my trades and see, has he got a point? Am I taking bullshit losses? Because there are losses you take that are just good losses, but there's probably a high chance you're taking some garbage ones as well. So before we go further into this episode, if you're not already aware, as a Falcon member, you will have access to something called the Falcon Mechanics. Now, this is included in the Falcon membership. This is a data-driven pathway where essentially we have created the A to Z in how to trade our system in a mechanical way. It is so straightforward. As you can see here, we've got 8 lessons. These are the entry mechanics. You'll have access to everything that you need to be able to learn how to trade our strategy efficiently. Now, this has been data driven off of our top traders, so no stone has been left unturned as to how you can effectively trade our system in the fastest way possible. So everything is included in the Falcon membership. So mistrade there, same psychology, and the psychology behind what I just taught you, which was, again, I'm seeing this as a gap towards that high, so I definitely don't want to be trading here. I want to be trading here, and that was the entry. Simply playing the range, so simple. And then what do we do again? We break the low, we come back up. What do we leave? We leave the very thing that I just showed you. Then what do we have? We have more of our local highs. What are those local highs doing? They're leaving gaps towards where most of the volume is. Then where is the volume here? There it is. Now, granted, this is CPI, so this was taken on my personal account, not on funded capital. So please don't take these type of trades on funded capital. You got to remember, things like CPI, etc., only become more of a talk of the town since funded capital, because we understand slippage. Like, you could take slippage on a trade that has got fuck all to do with CPI. You do understand that. Like, I've traded for years. I've taken slippage in all different places when it's got nothing to do with a major news announcement. The issue is that when you're trying to build your funded capital and you're a few percentage away from losing your account, or you're just generally have your funded account, probably not a good idea for you to compromise your funded account over just one news announcement. Now, banned in pretty much most funded challenges anyway. However, people had this mentality where they're just going all in on a news announcement and going, right, if it works, it works. If not, I'll reset. I'll just buy another assessment. stupid gambling mindset. So I'm glad people have started to move away from that. But the premise of the trade, there are loads of trades like this that still shape up that have got nothing to do with news volatility. There's the gap, there's the value. Guess what I'm doing? And guess what I'm not doing? I'm not trading in the BS areas. And how do I know not to do that? It's not just technical. It's having the psychological discipline to say, no, Mark, this doesn't fit my plan, so I probably shouldn't take it. And what you guys and girls do that are consistently inconsistent, you get all in your head and think, but what if it does go? And there's so many other variables that I don't even have time to go into it in this video, but the psychological framework of the trade is the same. This is more of a well-structured trade. This is more of your V-shape, right, where they're sharper, but it was in the area where you'd expect it versus breaking this low into this, which is beautiful. So simple trade. So now just that lesson, I really does hope that helping, and I genuinely, hand on heart, I mean it with no maliciousness towards how you trade, what you do. I really don't care. What I care about is when people tell me, look, Mark, I'm taking loss after loss after loss after loss, and I don't really understand why. Is it just my statistical edge of my system, or am I not understanding something? Well, what we cover in Falcon is something called P.S.E, right? Now, the P.S.E model is very, very important. This, hands down alone, has made the way that we trade extremely more mechanical. We have a mechanical-based management system when we're playing ranges, so effective. P.S.E has been an absolute game changer. So if you are genuinely seeking some clarity and you want more of a methodical, systematic, more mechanical way of coming to your trades, and you want to learn the P.S.E model, that's included in the Falcon mechanics. It's all there for you. I wouldn't even have enough time to explain it here. And even if I did, you wouldn't understand it because you need the other lessons to layer on top of it. But honestly, P.S.E, from what I have seen within the community, it has been a game changer for people's results. So that is Euro Aussie, that's the lesson, and then this is Kiwi CAD, right? So the only way for me to explain it to you, so 3.3 on Euro Aussie, by the way. So we're out of the break-even streak, right, which happens. And you can see, again, if I just zoom out, just give you a simple thing. This one's actually a bit more complex because you've got literally high just above, high just above, high just above, high just above. When you've got multiple ones after this corrective structure broke out, they're a little bit trickier. However, you can still see, right, this is where a lot of the volume stepped in. What do? We leave the gap. We leave all these gaps. Eventually, we're going to tap into that, which we have. So we've done that on the daily, 4 hour, broken above, taken out everything that we needed to. This is where likely the liquidity is or the volume is. We've stepped in. Then we've got a continuation play, and then we're looking for an entry. But on the 15-minute, what have we got? Right, same thing. This is where I'm interested. This is where I want to be trading. I don't want to be trading here. What do you see again? Same thing, systematic. What do you see on the low? See this low? Look at the gap towards the low. What eventually happens? This low takes out that low and this low and then moves into that territory. So it's the same thing. So you understand that. I've just showed you that in a nutshell, right? There are, of course, other components that go into that. However, that is a very simple trade. I can look at that trade and go, right, there was my entry. The 1 hour was set. I can take that, and I can take that as a good loss, knowing that, right, if I take a loss, I don't care because I know that's a good loss versus trading in bullshit areas where it would be the equivalent of, imagine I traded here like that, and then I had a high just above like this, and then price, this is actually a good teacher. Let's say, this is the easiest way for me to explain to you. It'd be the equivalent of this, where you're zoomed in or maybe even lower time frames and you're taking a trade here, you get tagged in, right? Tagged out takes a loss. Bad loss, right? Because I know that you got in out of FOMO and other reasons. When you knew, you lacked the discipline to just wait. That was the area. Why are you getting in anywhere before? Where what I can look at now is go, right, I've waited for all of that. I've avoided all of the BS areas. And I can comfortably stick to my edge knowing that, right, if I take a trade like this, more often than not, it's going to play out. So I just follow the plan versus most people are saying, right, yeah, I want to build my technical skill and I want to become better technically, but they have no emotional composure to even stick to anything. It doesn't matter if they have plan number 1, plan number 2. It doesn't matter if you give them the most profitable trading plan on the planet. They don't have the discipline and the emotional control to stick to it. That is the issue. You've seen it in prop firm data. I don't make up the rules. Like, the stats are the stats. People lose their accounts for mainly emotional reasons. 99.9% of traders are not all technically impaired. There are thousands upon thousands of traders that are more than capable from a technical standpoint. They lack, however, emotional regulation. I really hope it helps. We'll see how this plays out, but we've got our 3.3 and we move forward. Very, very exciting end to the month, and there's so many things to look forward to. Really hope this episode helped. Let me know in the comments if you'd like to see more.